Hello! May gabi sa tanan. I hope you're doing well today. So, ikaduha ni natong video for managerial accounting. So, human na to sa basics for routine decision making. Kani para ni sa non-routine decision making. So, we tackle on this video tutorial the basics for accept, reject decisions, drop or maintain segment, or sell process further. Okay. I hope nga okay mo sa last video, and if you have questions regarding that video and this video that I will be this tutorial that I have right now, feel free to comment in this video and like or subscribe the channel, the distant learning channel that I have created. This is for Norsum Mabinay BSBA HRDM students as educational resource. Okay, so I hope maayo ra mo din ha sa inyohang mga panimalay isag lagyo ta. We continue to communicate and we continue to help each other to get through this without compromising our education. Let me pull out the screen for the tutorial today. Okay, so for today's tutorial, since this is the second tutorial that we have, this is for non-routine decision making. So when we talk about non-routine, unsa man ni siya? So these are decisions made using the discretion or the will of the decision maker in addressing situations that are uncommon or isolated. It is quite risky, wherein bad decisions are irrevocable and causes material damage. Kung mutok ng guta og non-routine decisions, some of which are considered to be critical. When I said critical, it affects the normal operating cycle of the business. It can alter the business operation. So what are these example of non-routine activities? There are three that we'll be discussing basics for today. We have the first one is to accept or reject a special order. The second is drop or maintain a segment or a department. And the third one is to sell or process further. So each of these decisions may or may not alter the normal operating cycle of the business. Let's proceed. So okay, so sorry for that. So let's proceed. This slide refers to the decision rule in the non-routine activities that we have presented in the previous slide. The three types we have: accept, reject, drop, maintain, and sell or process further. The first non-routine activity that we'll be having is the accept or reject decision activity. So this basically is an activity to check whether or to determine whether to accept or reject a special order. When does a special order happen? This situation happens when the business receives a special order from a one-time customer, or the company needs to determine, wherein the company needs to determine whether to accept the special price offered by the one-time special order customer. A special price offered is usually lower or higher than the regular price. The business manager or owner needs to find out if the value of the special price is indeed higher than compared to the total relevant costs in making, selling, and delivering the special order. So this decision rule will dwell on either to accept or reject. So the check mark here, we have if special price is greater than or mas dako siya sa incremental or relevant cost in selling, in making, in delivering the special order, therefore, mo result siya og net advantage because ang special price or the special selling price is greater than the cost, incremental cost. The company should accept the special order. It will result into a positive impact or positive figure in the net profit. So however, if the special price is lower than the total incremental or relevant cost, mas dako ang cost in processing, in making, in delivering the special order than the selling price being offered, then it should be a reject decision. Wherein if this is so, the reason for this is it will result into negative disadvantage of in the net profit, or in the calculation of the net profit at the bottom, it will result into a negative or a disadvantage. So the second activity, routine activity, is the drop or maintain. So in this activity, the business owner or the business manager resolves whether to drop or maintain a segment. When we talk about segment, it is either a product line, a branch, or a business unit. So if a manager is considering to drop a product line, a branch, or a business unit, it should only be dropped if the total loss in revenue or sales is lower or will be lower than the total avoidable cost. So kung hisgutag avoidable costs, they are all costs that can be eliminated once a segment, product line, a branch, or a business unit is dropped. So mo ni siyang ma-avoid ng cost if that happens. So kung avoidable cost is lower than the loss on revenue, then you have to maintain the product, for instance. So in having a resolve whether to decide to drop or maintain a segment, additional dropping costs, complementary and substitute products should be considered in making the final decision. So the decision rule for this is if the lost revenue of dropping a certain segment is mas dako siya kaysa sa avoidable cost nga ma-eliminate kung i-drop ni siya, so that means to say a net disadvantage will happen if i-drop ang segment because ang loss sa revenue is mas dako kaysa sa avoidable or cost that will be eliminated once dropped. Therefore, the business manager or the business should decide to maintain the segment. However, if the loss of revenue due to the decision of dropping the segment is lesser than the avoidable cost, mas dako siya the avoidable cost or the cost that is eliminated once the segment is dropped, then the business should consider dropping the segment. So the last decision rule is to sell and process further. Okay, I have difficulty in just give me a moment. In pulling my slides, it doesn't go next. Okay, so we have okay, just a moment. Second, the third last activity is to sell or process further. Kaya record ko din.
Karen na lang usa na.
Okay, sige, so sorry about that. We'll go with the sell or process further. Just a moment. Okay, sell or process further. This is a decision wherein a manager or a business owner determines whether to sell or process further. This happens when a decision has to be made to either process a product further to its final stage or to sell it off now. The decision will be dependent on the incremental revenue for processing further. If it will be the incremental revenue for processing further will be higher, mas dako siya kaysa sa incremental cost, then process further. Otherwise, sell it now. So note, however, that any joint production cost is considered to be sunk costs. Sunk costs are irrelevant to the decision making because they are irrevocable. They cannot be recovered, or irrecoverable cost. So the decision rule for seller for a process further is if the incremental revenue of selling it now is greater, mas dako siya sa incremental cost of processing further, then sell it now. Because it will be giving us a net advantage in the bottom line. However, if the incremental revenue to process further in processing further to its final stage is the sale for this will be greater than the incremental cost of processing it further, then therefore process it further. Okay, so let's go with the illustration. Okay, the first illustration to illustrate problem solving for the first non-routine activity, accept or reject a special order, is Angela's Corporation's data. So Angela's Corporation sells products with the amount of 35 pesos selling price per unit. So this company's unit cost based on full capacity, the full capacity for this company is 400,000 units. Means to say that's the limit of manufacturing limit for Angela's Corporation is at 400,000 units. So the cost drivers are identified per unit item with corresponding amounts. So we have direct material at 8 pesos per unit, direct labor 10 pesos per unit. Variable manufacturing cost is at 4 pesos. We know that variable costs or costs that are dependent on the number of items manufactured or produced. If the number of manufactured items go up, then this variable cost go up. If it goes down, then the variable cost goes down. So fixed manufacturing costs at 8 pesos, however, they are committed costs. That means to say, regardless whether you have zero production or 100 item production, regardless of the numbers, these are committed costs. So that means to say, zero or to infinity, the same amount will be due or will be paid. So we come up with a product cost of per unit item of 30 pesos. So cost per unit item of product is at 30 pesos. So here's the situation. A special order offering to buy 40,000 units of item has been received from a foreign customer for 30 pesos per unit. So this is the offered special price. The only additional selling cost that would be incurred on this order would be 6 pesos or 6 pesos per unit for shipping. So this is what we call the incremental cost of accepting the order. So the company has sufficient idle capacity to manufacture the additional units. So mayroon silang idle or hindi nagagamit na capacity level. So the requirement is, if you are the business manager or the owner, determine if Angela's Corporation should accept or reject the special order. Here comes the solution for number 1. So in order to arrive at the decision, we have to check or compare the special price per unit versus the incremental relevant cost per unit. So we know that the offer price for the special order is 30 pesos per unit. So we have to check if it is higher or lower than the incremental cost or the cost that will be incurred if we will be accepting the order. So direct materials is 8 pesos, direct labor is 10 pesos per unit, variable manufacturing cost is 4 pesos, shipping, this is the incremental or additional cost once we accept the special order at 6 pesos. Please note, this, we don't have any fixed cost. The fixed cost is gone. Where is the fixed cost? So fixed cost, as we say, it's a committed cost. Regardless if we go on with accepting or rejecting the special order, it doesn't matter. Fixed cost is committed cost. That means to say it will be there, it will be paid, it's an expense. So therefore, it's irrelevant in making a decision to reject or accept an offer. Okay, I will move on. So therefore, since the special price is greater than the total incremental cost per unit, which is, we have total this portion here, we have 28 pesos compared to 30 pesos. We have 2 pesos incremental income per unit. So it will be multiplied by the number of units of the special order, which is 40,000 units is being ordered by the foreign customer. So we have to come up with the total advantage. If we accept the special order, we come up with a net advantage of 80,000 pesos. So therefore, our decision rule, if the special price, which is 30 pesos, is greater than the total incremental or the relevant cost per unit, which is 28 pesos, we have to accept. Therefore, in this case, Angeles Corporation should accept the special order, because it will be giving us the total advantage, or the corporation the total benefit or advantage of 80,000 pesos. I hope you get it. Okay. Sige. So, if you do have questions in the accept or reject decision, feel free to comment in the video, or express your comment here below, or subscribe to Distant Learning channel, so that you can express any concerns or any questions, and I feel free to express yourself, and I will do my best to answer it. Okay, so let's proceed with the second. Okay, the second rule, non-routine activity, an illustration, problem-solving illustration. In this time, we have the Pampanga Corporation data. So Pampanga is considering to discontinue or to drop product A because it is unprofitable. So dili na wala na ginansya si product A. If Pampanga decides to discontinue product A, that 35,000 pesos, which is part of the fixed cost, totaled 60,000 pesos will be eliminated. This is what we call as avoidable cost. The cost will be eliminated once a certain segment or product is being dropped. But the remaining fixed costs will remain for rental, lighting, and heating the store room. So the remaining 25,000 pesos, which is the difference between 60,000 and 35, will be remaining and will not be eliminated. So when we talk about drop or maintain, means to say that we have a choice either to continue or discontinue a certain product line. So in this case of Pampanga, the requirement is to determine if Pampanga should eliminate or drop a product A because of the reason it's unprofitable. So here is the data. So sales to product A compared to product B, we have 100,000 pesos sales for product A, and in comparison to 200,000 pesos for product B. This is less with variable cost, 60,000 pesos for product A and 100,000 pesos for product B. So contribution margin for each product is positive 40,000 for A and positive 100,000 for B. So the fixed cost for A is 60,000 and the fixed cost for B is 50,000, resulting in a net profit or loss, which is for product A, it is net loss, which is 20,000 pesos, and for product B is 50,000 pesos. So a total of 30,000 pesos. So the product A basically drags down the profit from product B because it's being unprofitable. It has a negative net value. So instead of 50,000 pesos that will be gained, that should be gained by the company, it reduces to 30,000 just to compensate with the 20,000 negative that is being lost with A. So how to solve this problem? So drop or maintain problem, we have to recognize the decision rule. The decision rule is if loss of revenue because of the drop is mas dako siya kaysa sa avoidable cost, we come up with the maintain decision. So what do we do? So product A, the loss of revenue, if ever we drop product A, the loss will be 100,000. It's the sales on product A. We are going to lose it if we drop this product line. Then it will be less with variable cost, which is 60,000. The contribution margin supposed to be earned is 40,000 pesos. This one is compared to the avoidable, or the cost will be eliminated once the segment is being dropped. So the avoidable cost is 35,000 pesos, resulting to a 5,000 pesos discrepancy. So that means to say the loss of revenue is greater than the avoidable cost, or the contribution margin, the margin that is being contributed with product A is greater than the avoidable cost, or the cost eliminated once this product is being dropped, is will give a net decrease in profit if product A is being dropped, because it will result in a reduce in profit by 5,000. So the loss revenue is, which is 100,000, is greater than the avoidable cost, which is 35,000. Therefore, instead of dropping it, the product A should be maintained. Therefore, in this case of Pampanga, should A maintain product A, since dropping or eliminating it will result to a net disadvantage or loss of profit of 5,000 pesos. So the last non-routine activity is to sell or process further. So in this situation, we have to determine whether to sell or process further. To illustrate the problem solving for this, here is Laguna Company data below. So Laguna Company produces donuts. So by the way, who loves donuts? Laguna Company produces 3 flavored donuts. Your favorite: Choconut, the first one. Second one is Strawberry Field. And the third one is Bavarian flavored. Wow. Okay, let's continue. Okay, so the production phase begins with the joint process that costs 7,000 pesos. So for each product that can be sold at split off or process further stage. So the joint process cost is a sunk cost, thus it's irrelevant. So we have 7,000 pesos. It's irrecoverable cost. It's a joint cost, and it is immaterial, not important in making decisions. So we should not include that cost since it's considered as a sunk cost. The details of producing the 3 donut flavored from batches are as follows. So we have this flavored, as I mentioned, the Choconut, the Strawberry Field, and the Bavarian Crumble. So the joint production cost allocated to each product up to split off is 44,000 pesos for Choconut, Strawberry Field 1,000 pesos, Bavarian Crumble 2,000 pesos. So this is joint production cost. Oh, as what we mentioned, the 7,000 pesos, which is the sunk cost. These are irrelevant costs since it's considered to be irrevocable or irrecoverable. It's there already. So we have the sales value if sold at split off. That means to say work in process. So if we will be selling at work in process Choconut, we will be gaining 2,000 pesos. Strawberry Field, if we sell it at split off or work in process, it's not final yet, it's not ready to eat yet, we will be gaining 6,000 pesos, and Bavarian Crumble at 8,000 pesos. Here is the data also for sales value process further. At its final stage, if we process it further, the Choconut will generate 4,800 pesos sales, and a Strawberry Field donuts will generate 9,000 pesos sales, and Bavarian crumble will generate 14,000 pesos sales. So the processing costs, the incremental costs, if it is processed further, in the choconut, we have 1,600 pesos. This is the additional cost. It follows that if we process further, we incur additional expenses. So here it is. The additional expenses for processing further is 1,600 for choconut, 3,500 for strawberry field, and for Bavarian, we have we have 5,000 pesos for Bavarian if processed further. So here is the solution for problem 3 or situation 3, sell or process further. First step, step 1, determine the incremental revenue by comparing sales value at split off or work in process versus sales value if processed further or at process further. So we have sales value if processed further, and then sales value if sold as split off or work in process. So we can see basically very obvious that if we will be processing further every flavored donut, we get a higher value of sale. So the incremental revenue or sale, if we process further for chocolate, for instance, the difference between sell further or sold it now is 2,800. For strawberry field, 3,000 will be the incremental sales if we process it at the final stage. And lastly, the Bavarian, which has the highest, if it is processed at the final stage or processed further, it will give us an additional amount or of sale of 6,000 pesos. Step number 2, determine the net advantage or disadvantage by comparing incremental revenue versus incremental cost of processing further. So if you process further a certain item or a certain product, it comes up or it follows that it will incur incremental costs or expenses. So in this, the choconut with incremental revenue of 2,800 will incur a cost of 1,600. We have to deduct the cost to the incremental revenue to check whether it will be having a positive or negative net value or a net advantage or disadvantage. So for choconut, its net advantage is 1,200 pesos. So for strawberry field, however, then the expense or the cost for processing further is bigger or higher than the revenue that will be collected if it is processed further. It gives us a net disadvantage of 500 pesos. It's a loss. So because the cost of processing further is higher than the sales of processing it further. In Bavarian crumble, however, we have a net advantage of 1,000 pesos, which give us a total 1,700, a total of 1,700 all in all. Okay. So there was a decision rule for activity or situation number 3. So the decision rule for this is if incremental revenue from selling it now is mas dako siya kaysa sa incremental cost of processing further, the decision is to sell. However, if the incremental revenue or sale in processing it further is mas dako kaysa sa incremental cost sa processing it further, then therefore you have to arrive at a decision to process it further. Therefore, in this case of Laguna, our answer for this situation is Laguna should process further the choconut and the Bavarian crumble. You can see, if you process further the choconut and Bavarian crumble, it will give Laguna Company a total benefit or advantage of 1,200 for choconut and 1,000 pesos for Bavarian respectively. It is a positive advantage or a positive amount. So the strawberry field, however, should not be processed further, for it will give the company a net disadvantage of 500 pesos. So therefore, it should be sold out at split off or work in process to generate the revenue of 6,000 sales value. Okay, so I guess that's it. Let me stop my share. Okay, mo ito'y ending sa atong basics sa covering nato sa accept or reject decision, sell or process further, drop or maintain a segment. These are part of non-routine decision making technique sa part 2 sa atong exam. However, I have to tell you honestly, this is the basics. The basics only for the routine. Our final exam, which is the part A, which is in part 2, is pretty much advanced. So I will be creating another video for you for advanced level of problems regarding accept, reject, drop, maintain, or sell or press further, and the last one that we haven't talked on this video tutorial, which is the shutdown point. Okay, so I hope this enlightens a little about our topic on non-routine decision making, and this is helpful to you in solving your final examination part 2. I wish you all the best. Thank you, and see you in the next video with advanced non-routine decision making. Bye bye. Have a great night.